Welcome to the weekly review of week 25. I'm gonna keep it short, but this is how you should mark up your charts and figure out in hindsight where you could enter because there was a lot of opportunities here. A lot. So let's get straight into business. Monday there was news, so it's tradable, but it is counter trend. Tuesday there was news, so it's also tradable. Wednesday there was GBP CPI, and as a result of that, we got SMT between EU and GU, but there was bank holiday, so low probability. Thursday we had news, and Thursday was where the fireworks are gonna pop, like I said. And obviously it delivered. I'm the goat. And then Friday there's a lot of news as well, but I wanted to focus on New York session, but the day before I studied all these news, and I'm gonna keep it a buck. I changed my opinion on these news. It's ping pong type beat, but if you know where order flow is going, you can capitalize on it. And I did. So Friday was also a beautiful day. Let's get straight into business. So when we start the week, what have we done? Let me go to the daily. We had taken out external range liquidity and liquidity on DXY. Let me see. This one right here. And EU took it out earlier. Let me see GU. No, not like that. Yep, GU had also reached a beautiful liquidity pool. So what does that mean? When a high time frame objective has been met, what can we expect? Consolidation or retracement. Now what happened? We got a beautiful break pattern on Friday, and then coming into next week, we had a beautiful reaction of that H1 breaker. Now, I personally do not like to trade counter trend, and I do not like to trade when there's no news embargo, and I don't like to trade Mondays. But there was news on New York session. But as you guys can see, this is the H1 breaker, this right here. We have the Judas swing, the H1 breaker. We leave another breaker right here, retest it in New York session. We sweep liquidity one more time before making the move up. This is your Judas swing. This is your break pattern. And then it went to our PD array where we were looking to short. So when I came to my charts on Tuesday, I really liked the way this H1 break pattern was setting up. The only thing I did not like was that it looked too good to be true, and it ended up being too good to be true, unfortunately. But we take the hit, we move on. So it left a breaker. So ideally, what I was thinking is, it was just worth the risk, actually. But I was thinking we might sweep it once more. Why? Because this is left over. We have only swept this liquidity. We did not yet trap enough people, it felt like. Or we did not sweep enough liquidity yet, it felt like. So we tapped the H4 breaker, left the H1 breaker. Now the H1 breaker is simultaneously a M15 breaker pattern. Now inside of that M15 breaker pattern, there was another M5 breaker pattern. So if you have taken this trade, I would understand. And unfortunately, it ran to like 1.7, I think. Yeah, 1.78. Hey, part of the game. Damn, now I'm looking back at it. To be completely honest, how many pips is this? 10. Alright. To be completely honest, like, fair value gap. Is this a fair value gap? So, fair value. Oh, I want a pencil. Fair value gap. Immediate rebalance. Another fair value gap. Breaker block. What are the odds price is gonna come back all the way above the breaker, above the sweep? You feel me? So if you choked your stop loss, hey, you could have banked maybe a bit more, but you guys know what I say. When your bias is correct, it doesn't matter too much. You just want your stop at a safe enough level. But if you're a maniac, like you would have banked 2 RR here, I consider this a loss for my playbook. Now, I did not expect this at all, was blindsided by it, but it's okay. Now, after the CPI news of GBP at 2 a.m., we get SMT, we take the high right here. So if there was no SMT, price would be like this, right? And then this is our breaker block. Now, this is our mitigation block right now. And what do we do in a market maker model? Now, listen to me carefully. I have explained this so many times. And if y'all just paid attention, but hey, some people just don't want to win. So just pay attention to the codes and then you win. Now, what is this? Smart money reversal. So this is our low risk scale right here. Then what makes this? This is our first stage of distribution. Now, did we pierce 50% of the range during the first stage of distribution? Yes or no, we did. So what makes this the second stage of distribution? What did I tell you guys about the second stage of distribution? That it is going to be a explosive move to the draw on liquidity. And Honor, what happened? Yeah, exactly as I said. Now, what did I also tell y'all? In the weekly outlook, past blocks are going to be used to offload positions. So this mitigation block right here, offload positions, melt. Then we have this mitigation block right here, where this price retrace into a fair value gap alongside a mitigation block. And then we sweep out early shorters, and then we get the most beautiful unicorn model in the world this week right here. This is just art. This is truly just art. Art, this is art. You should annotate this, slap it onto your wall, okay? Because this is truly art. I want to see this SMT right here. I think, am I seeing that correctly? I want to see real quick how that looked. Let me see that real quick. So, where was I even looking at? Right here, right? So it's a 7 a.m. candle. Oops. See. 7 a.m. candle. High, low. High, low, low. Wait, let me check this real quick, boys. Let me check this real quick. So we got a low, high, low, high, low. We failed to make a higher high, so this also indicated that this was probably a unicorn pattern. Interesting day. So we are inside of the mitigation block and we had SMT. So you could have put your limits potentially right here, but what happened? Price never came back, unfortunately, except in New York session. So what happened in New York session? We had another beautiful unicorn pattern happening. So you could have put your limits on the breaker or whatever you want. Stops on the candle. And then if you could stomach all of this, if you just stick to the model that I taught y'all, you would have had a beautiful 2RR right here. And on the next day, now, this is very important. So what did I tell y'all about mitigating premium again after we already done it? It is not needed. The only thing that's needed in my eyes is to rack early participants. So once we create this new leg, some would say maybe this is the leg, right? Like this. And then they would be like, oh no, it never came to premium. Now that's not the leg, first of all, because there's a multitude of time frames. And if we sweep a swing low from the new leg, that's quite premium if you ask me. And if we take this, if you take this as the leg, we were also in premium. So there's two confluences that debunks that H4 leg. Now, when we have a daily candle like this, the previous one melts, right? So it's like this. What are the odds the next candle is going to open up, come all the way up to mitigate premium, leave a big ass wick, and then go down? What are the odds? Not much, right? So in days like this, where you are looking for continuation sells, you want to just have midnight open marked out on your thingy. And in this case, well, this right here is the candle open. So we had a big wick, we had a run up into premium, taken out early shorters, and then we had a unicorn pattern inside of a mitigation block from the left side of the curve, alongside a fair value gap. So there's your unicorn. And we beautifully mitigate. Oh, that's crazy. Look at that precision. So we beautifully mitigated. And that's just art. Also, we had SMT with U instead of a key level. That's also a good thing to note. And a beautiful 7.79 RR if you held it to the bottom. If you had the perfect entry and exit. Just this is just art. Now what I'm teaching y'all, show me anyone else that teaches it this simple, explains everything from beginning to end, explained everyone that this is just a psychological trap and that you should have your ammunition out for these 2 days. And when did we get the high probability setups? Yeah, these 2 days. That is crazy, right? And what did I say in the analysis chat? After we have reached a high time frame draw liquidity and when the markets are not moving in tandem. Honor, why are the markets not moving in tandem? Now let me show you. Why are the markets not moving in tandem? Down day. So these two are correlated. So if interest rate bonds treasury bonds go down, then Euro USD we want to see it go down too. Now what happens? Down day, up day right here, up day right here, consolidation day right here. That was bank holiday here, so there's no candle print for some reason. Now down day right here, small down day. We have a huge down day right here. And then right here we have no consolidation day, and here also slightly bearish, a little consolidation type day. And what happened after we had SMT with the drawdown liquidity, we ended our day. So if you got greedy and you were like, no, 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 I want to get this external range liquidity. Brother, first of all, when the markets are moving not that clean, just take your TPs at rejection blocks. Capish? Let's see if we touch this one. We didn't. So right here at the H4 rejection block, how much RR would that be? 4.72. So another jam. For y'all, in low probability market conditions, you want to be nimble with your profit taking and potentially take profits at rejection blocks rather than the wicks. Why? Because bulk of the volume is in the blocks, in the bodies, not in the wicks. Also, I would consider this. If we look at this like this, I would consider this like this wick right here. That is because of news. So 10 a.m. news. Let me see what was at 10 a.m. Wait, this was not the reaction of news. Tuesday, 18 June. That is so crazy. This was natural price action. Wow. Okay, I did not know that because I was out of my charts after New York didn't confirm my sentiment. Like, I'm not going to chase anything. Also, this is quite a nice unicorn right here as well. See that? Okay, I thought that was news, so I was going to say something, but never mind. But still, even if it's not news, you guys know the wicks bulk of the volume is in the candles. So this will be a high like this, higher high, because we take liquidity right here with the bodies, lower low. This is a breaker type beat in my eyes. This mitigation block. That's another jam. That's how I internalize price, by the way. I'm not saying what I'm saying is right. All I'm saying is I'm the goat. Let's see. So after we took external range liquidity on DXY and you had already met it, I think. Yes, so G already took it the day before. We were out of the markets. Why? Because I'm not gonna try my luck. I'm not dumb. You feel me? You will get there by experience. Now I'm saying this right now, so write it down and realize it. In low probability market conditions, you want to be nimble with your profit taken. And in the PDF, I already explained where to take profits. So y'all should already know. Exactly as yeah, this is just consolidation profile. I was looking if we can find a nice entry somewhere. That would be this, and that's outside of a kill zone. Maybe there's SMT going on right here. Very weird price action. So that's it for the week. What are the high probability trades? 1, 2, and 3. Now there were counter trend trades that you could have taken. Should you have taken those? Up to you. I'm not your daddy, bro. I'm just teaching you a model. You can take whatever parts you want from it and run with it. But these were the high probability trades in my opinion. Now, I hope you guys enjoyed this market review and study market maker models. Like it low-key went how I teach y'all in the video. One money reversal, you want to look for entry right here. What happens? We got an entry right there. Then there's another leg, and then you want to look for entry when we sweep the liquidity or we retest the breaker. Now, it did not happen there, and price does need to be perfect. Now, what happens right here? We have high, low, higher high, low, low. What I always tell y'all, when there's a sweep, you can look for the unicorn inside of there. And what happened? It came beautifully right there. So literally what I explained extremely simply to you guys, if you just apply it, you can make a beautiful living off this market. If you are disciplined enough, etc. And it's not financial advice, it's all demo environment, simulated environment. So good luck watching this weekly review. I hope it helped. Peace.